So first things first, when looking for liquidity, we must ask ourselves, what is liquidity? What actually is liquidity? Liquidity is where stop losses are sitting. If you notice, a lot of traders, we're all pretty much trading in similar ways. We usually all put our stop losses or take profits at major lows or swing lows or even major swing highs and swing highs. So for example, this major peak of a low right here, I'm just going to use a blue line, is holding stop losses. People's stop losses are right here, which is what? It is money for the market to come and grab. Now, why is there stop losses here? Because with all of this bullish buying pressure, somebody had to get in that buy. Someone has created this structure to go to the upside, right? Which then means if somebody's in buys, they also have a stop loss, which most of the time, majority of the time, are always below major swing lows. Okay, so for example, this is a major swing low, as well as this right here is a major swing low. This little, even just this little wick, that's a major swing low. So what we're gonna do is we're gonna keep those lines there for one, and we'll see if the market comes down to take out that liquidity. Now, what did it just do? The market came down, stopped everyone out. Anyone who was in buys right here and had their stop loss below, the market just took their money. But let's look even further, because with liquidity grabs, we can look back here. I mean, liquidity can be very, very old price action. And I've already looked at this, but we're gonna just use this as a demonstration because I think it's perfect. So we're gonna grab more setups too. But anyways, this is clear as day a major swing low, right? What does that mean? It means stop losses are sitting underneath the low. Why are stop losses sitting underneath that low? Simply because all of this bullish buying pressure has people putting stop losses somewhere, right? And then you ask yourself, where are these people most likely putting their stop losses? Well, majority of the stop losses are under this swing low, and the market knows these things. Okay, the market knows that stop losses are underneath. So this is exactly why the market has, for one, took out these lows, and for two, came and also took out this low. So this blue line indicates that low I was just showing you, but as you can see, this red candle came, swooped below that low. It doesn't close below, which is ideal. That's something you want to see. It doesn't close below. It pushes back up, takes the money, and basically is about to run. So that's what liquidity grabs do. The market likes to grab money and then take off the other way. It doesn't do it every single time, and the market doesn't just do only that. Like, it's not always going to come and grab liquidity. Just because there's liquidity does not mean that the market is going to come and grab it. So let's just make that very, very clear. But now, if I was to be looking at this setup, right, I would understand, okay, this red candle came below my blue line, which was indicating what? My liquidity zone, where stop losses are, which is good, right? We came below the blue line. Now, if price closes above the blue line, which it has done right here, you can see the red candle didn't close below the blue line. That's something you want to see. If it closes above the blue line, and then the next candle gives me a break of candle on this red candle, if the next candle comes above this red candle, I will be in for buys. So let's just see what happens. Okay, instantly. And usually with liquidity grabs, they're usually very quick. Like, you're gonna see a lot of buying pressure coming out of these zones, or vice versa. If it's a liquidity grab from the upside, which just happened, I believe, right here, you're gonna see extremely strong selling pressure coming out of these zones. So here you can clearly see this is a liquidity grab. This red candle wicked above the two blue lines and then instantly shot down. Instantly. So you can obviously see that liquidity grabs produce some pretty strong market movement. Now, let's go back to the setup. We got to break a candle on this red candle. My stop loss will go underneath this red candle, and my take profit will go for a 1-to-1 always. That's just my trading plan. I always go for a 1-to-1 ratio. I find that if I go for a 1-to-2 or a 1-to-3, my win-loss gets ruined. I usually lose a lot more trades. So my trading plan is to just always stick to a 1-to-1 ratio. That just works for me. Now let's see if this trade works out. And it did. So we hit take profit. And that's that I would be done for the day, would have made some good money, and I would have moved on to the next day. So let's just do that right now. Let's go to the next the next liquidity grab. All right, here's another perfect example of a liquidity grab. So right here, you can see that this red candle prints. It shoots below what? It shoots below this low. Okay. Barely does it. You can barely see it, but actually, matter of fact, let me refine that a little bit better. It barely comes below. You can see, but why does this make this a liquidity grab? Because if you look, again, we have major bullish buying pressure, and if people are in buys, that just means people also have stop losses around areas like this low, there's stop losses, this low. I mean, every major swing low or swing high, there's stop losses. People that are in sells right here, their stop losses are on the major peaks of the swing highs, right? So now that we understand that, let's just look and see what happens once the market comes below this low. Doesn't close below it, wicks below it. Keep that in mind. It doesn't close below it, it just wicks below it. Let's just watch exactly what happens. So boom, shoots below it, instantly comes back up, and then at this point I would be looking for a break of the candle on this green candle for my entry to get in for buys. So there that's where it would be. So technically I would be getting in right there. Stop loss would go underneath the green candle, and I would be going for a 1-to-1 ratio. And then we just gotta wait and see if this plays out, which I'm pretty confident it will. There you go, and that's a liquidity grab. Plain and simple, nothing more to it. I mean, like that's literally all it is. It's just price action wicking below major swing lows and major swing highs, and then going the opposite way. That's a liquidity grab. I'm gonna get one more setup for you guys just so you can see that this is not me just speaking garbage. This is actually a real strategy that you could use to make money. All right. So again, surprise, surprise, what does price do? Shoots down. Let's just mark up these lows. That way we can make it accurate. We have one low right here, and we have another low right here. This is a double bottom, which is just, when you have a liquidity grab on a double bottom, dude, if you're not getting in that trade, you're tripping. Because the win rates on these are crazy high. Now, what happened? This candle came below, wicked below. Keep that in mind. Again, doesn't close below. Then you get another candle printed, which at this point I would be thinking to myself, okay, we just grabbed the money, we grabbed the liquidity, we dipped below, but we didn't close below. Perfect. Now all I'm waiting for is my entry signal, which would be the break of the candle of the top of that green candle. Okay, right on that white line, right where that white line is, the top of the green candle. If the new candle comes above that, I'm in for buys, and I'm going for a 1-to-1. Okay, now that candle did not go above, I'm going to get in if price comes above this red candle now. Okay, if the next new candle goes above this red candle, I'm in for buys. Doesn't look like that happened. So again, if the next new candle comes above this red candle, I'm in for buys. And the reason this is still valid is because price hasn't closed below the blue lines. If price closed below the blue lines, I wouldn't even be looking at this liquidity grab. I would actually, sorry. If any candles close below the low of this red candle, it would be invalid. I wouldn't be looking for a liquidity grab. I would just move on to the next setup. Now, did that break the candle? I can't see. It didn't. So again, if the next new candle comes above this green candle, I'm in for buys. And that's what we got. So entry would be here. Stop loss will be at the bottom of the green candle. And my take profit again will be a 1-to-1 ratio, which will be right here. And that's take profit hit, just like that. Plain and simple. You made your money, you're done for the day. And yeah, like liquidity grabs is probably the easiest strategy you can learn as a beginner. The thing about liquidity grabs is it doesn't happen every single day or as often as you would like. Like if you were somebody that only trades liquidity grabs, you would probably only trade maybe 1 to 2 times a week, which isn't bad. But if you're trying to scale an account, especially as a new trader, liquidity, just mainly focusing on liquidity grabs isn't ideal. But I hope this video helped. I'm gonna give one last brief demonstration as to why this is a liquidity grab, just for people that maybe don't understand yet. Again, okay, so this is a liquidity grab simply because it's, for one, a major swing low. Okay, this is also a major swing low that hasn't been taken out. No price has came below until just now, obviously. As you can see, after this major swing low, you have extreme buying power coming out of this zone, which essentially just means people's stop losses are underneath this low. Okay, most traders are usually taught to put their stop losses underneath lows, and so the market understands that. The market knows that. Again, same thing with this one. You have buying pressure coming out of this zone, people putting their stop losses in this area, and the market understanding that and coming down to wick underneath, take people out, hit their stop losses, which in other terms, these people are driving the market down, grabbing their money, and then going the opposite way with it. Okay, so that's essentially what's happening, and yeah, that's really about it. Like, there's nothing really more to explain. Like, it's really simple. I hope this video made sense. Try my best to explain it. It's not really much to explain, and that's why I said this strategy is for people that are really new to trading. It's not hard to understand, and yeah, I'll probably make a better video, because I feel that in this video I didn't really demonstrate or use my words as precisely as I could have. But yeah, I hope this video helped. If you have any questions, just write them down in the comments, and I'll try to get to you. Or maybe I can make a video off of those questions. And yeah, peace out, guys.